Sensex is up about 100. Mid-cap index is very, very quiet. The bank nifty isn't moving. The market is extremely choppy in a very tight and narrow range. So it's not an easy market to trade.
The high that we touched today was 17,061. So right now we are just at that 17,003 mark.
Beginning of the last hour of trade, it's looking a little better, 17,083. All of the enthusiasm which was there till about 2:30, 2 o'clock, mid-afternoon, completely out. And we're ending absolutely flat on the Nifty. We'll end with about a 20-odd point gain.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Indian indices closed with minor gains after failing to hold on to an intraday recovery. Mid-cap underperformed benchmarks while Nifty Bank closes flat after a day of wild swings. Market breadth firmly favors declines with 4 stocks falling for every one that rose. Nifty Pharma shines today, but the sector remains 6% lower for the year so far. Lupin soars after receiving no observations following a pharmacovigilance inspection by the US FDA. Sun Pharma buys into an animal health business, but also reports challenges due to a ransomware attack. Crompton-Butterfly Consumer Electricals announces a merger with recently acquired Butterfly Gandhimati. Butterfly shareholders will receive 22 shares of Crompton for every 5 equity shares held. The stock falls as the swap valuation favors the parent. Reliance gains 2% after domestic brokerage firm Kotak Institutional Equities calls the stock a compelling buy. Phoenix Mill surges over 3.5% after Morgan Stanley raises its target on the stock and initiates the coverage at 1,700 rupees a share, while a ratings downgrade pushes M&M a percent lower. Modestly better sentiment after Silicon Valley Bank finds a buyer for its deposits and loans keeps gold prices below the $2,000 mark. A firmer US dollar and profit booking also weighs the yellow metal lower. And here's the lineup of what we have in store for you. In Market Opinion, we have Vetri Subramaniam of UTI AMC, and in Corporate Voices, we have Varun Alag of Mamaearth. And straight to the day's market action. Market failed to hold recovery after mid-caps underperformed benchmark indices. Nifty and Sensex ended 0.25% higher, while the Nifty Bank ended flat. The mid-cap index ended with cuts of 0.5%. The market capitalization of BSE companies slipped to its lowest level since July 15, 2022. Prashant Nair is here with the details. Prashant?
Well, a disappointing day for bulls, those who are hoping that the market will finally break out. It did give us the signs mid-afternoon, even late into the session. The Nifty was up 130, 140 points. But in the last 45 minutes or so, things just completely went south. The Nifty ended absolutely flat, 20-odd point gain. Banks actually sold off. The bank Nifty was in the red by close. And it was not as if there was any great global volatility in the last 45 minutes of trade, our trade. So this is just sort of falling on its own weight. Nifty, the gainers first. Reliance was a big contributor. Infosys, Kotak Bank, Grasim and State Bank of India. More banks, actually large cap financials doing quite okay. Cuts coming through on names like Adani Ports, SBI Life and Power Grid, which were the top losers. Market breadth never recovered. Even when the Nifty was up and up, market breadth was deeply in the red, and that was the way we closed off at 3:30. IEX, Wockhardt, Aarti Drugs, Hikal, Surya Roshni, Bombay Dyeing are some of the names which fell on volumes. But there were gainers as well, even though, as I said, breadth was firmly negative. HAL, the defense name, Lupin, Biocon, Glenmark, Pharma actually had a pretty decent day. Naukri, that is InfoEdge, and Uno Minda were some of the stocks which did quite well. The question is, now that the market today once again has given up from the day's high and sold off, will it eventually retest the 16,850, 16,800 kind of levels? We got 2 tests of those levels, but successfully that was defended. And of course, global headlines become important again. US seemed settled as we came back into this new week. European worries continue, although price action in Europe today was also quite okay. Will banking worries globally take a bit of a backseat, which should allow us some relief rallies? Back to you.
Okay, Prashant, thank you so much for that analysis. On to some expert opinion now, where Vetri Subramaniam, Chief Investment Officer at UTI AMC, expects FY24 earnings expectations to be downgraded further. He also said that market valuations, they have returned to comfortable levels now. Listen to what he had to say.
I think the market's effectively gone nowhere if I look at price levels for maybe 18 months or more. Earnings expectation, when I look at the consensus for March 24, it looks like a bar which has been set a little bit too high. To deliver that kind of earnings growth in FY24 is a little bit of a very high bar, in my opinion. I think the good point today is that with prices having gone nowhere, you've effectively seen valuations sort of come back into the comfort zone. It's still actually not even come back to the long-term average, but it's at least back within the comfort zone. So we would sort of say there's a lot more comfort with where valuations are placed today.
Okay, that's a market opinion. Moving on to the second headline now. Nifty Pharma showed in trade today, but the sector remains 6% lower for the year so far. Ekta is here with a wrap on all the news that moved major stocks today. Ekta.
Well, yes, I'll start with the news on Sun Pharma. They have indicated to the exchanges after their March 2nd update. The latest update indicates that a ransomware group has claimed responsibility for a recent IT incident. It is expected to reduce revenue in some businesses as per the company. However, the street seems to be sanguine about it because the FY23 guidance of high single-digit to low double-digit growth is likely to be intact. Separately, Sun is going to be acquiring 60% shareholding in Vivaldis Health and Food for 143.3 crores, which is an India-based animal health company. And Credit Suisse upgraded Sun today to outperform from neutral with a target price of 1150. According to them, the specialty sales are expected to double in the next 4 years. Lupin was in focus because the UK MHRA, which is the UK regulator, completed an inspection of their Pithampur facility successfully, and the company also completed a pharmacovigilance inspection by the US FDA with no observations. Basically, that inspection includes scrutiny of practices and procedures for reporting of adverse events of Lupin's products. And lastly, Biocon was buzzing in trade today. IIFL upgraded the stock from reduced to add. Target price 230 rupees. According to them, valuations reasonable but not cheap enough. Biocon's current market price implies that Biocon Biologics is still trading at around 12.5 to 13 times FY25 EV to EBITDA.
Ekta, thank you so much for joining us. A busy day for you today. Moving on to the third headline now. Crompton Greaves Consumer Electricals has announced a merger with Butterfly Gandhimathi, which it recently acquired. Butterfly shareholders will receive 22 shares of Crompton for every 5 equity shares held. The stock fell today as the swap valuation favors the parent. Surbi Sataria is here with all those details. Surbi?
So why Butterfly Gandhimathi is in focus is because Crompton has announced merger of Butterfly Gandhimathi with itself. Just to alert, a year ago, Crompton had already picked a controlling stake in the company. Now, this scheme is subject to regulatory approvals, but if it goes through, the shareholders of Butterfly will receive 22 shares of Crompton for every 5 shares held in the company. And post the merger, the shareholders of Butterfly will hold a 3% stake in the combined entity. Now, the indicative timeline for completion of this merger is 12 to 14 months from now. Now, why Butterfly Gandhimathi is reacting is because last year when Crompton bought the controlling stake, the value of the deal was 1892 odd crores and the current market cap of the company is 2300 odd crores, which basically indicates that Crompton has paid 10% less for this transaction. Now, this morning, they held a conference call and some key takeaways from there are that they've reiterated that they expect the transaction to be EPS accretive from FY24. They've also said that till now, they have realized the cost synergies of up to 18 to 20 crores. They further said that in the future, they don't expect all cost synergies to flow to the bottom line. Part of it will be reinvested in the business. They aim to grow the Butterfly business at a double-digit revenue growth. They also said that the current manufacturing setup will not be able to meet the demands for the combined entity. And further, they said that getting approval from the majority of the minority shareholders of Butterfly will be key for completing this transaction.
Surbi, thank you so much for joining us with that analysis. Moving on, distribution of income as repayment of debt is now taxable from April 1, 2023 as per the Finance Bill 2023 amendments. Meanwhile, the deduction of acquisition costs from taxable income is allowed. Vikash Kadolia, CEO at Embassy REITs, and Ajay Roti, the partner at Dhruva Advisors, spoke to us about the impact of the bill on REITs and InvITs. Take a look.
Together with the dividend component, which is also tax-free, which is about 45%, about 85% of our distributions for FY23, there would be no upfront tax. So it's a huge plus for investor.
Insofar as the REIT is concerned, to the extent that the return of this amount represents what has been collected or it is a return of the capital that they have already raised, then there won't be a tax under other sources. So that 39% tax for the slab rate tax won't kick in on this amount to the extent that this repayment is the issue price.
Okay, these are all the top stories for now. We'll slip into a short break and be back in a jiffy with the other headlines that we are tracking for you.
इस बार टाटा आईपीएल जियो सिनेमा पे किसी भी स्क्रीन पे वो भी फ्री। चल भैया।
UCO Bank welcomes the Honorable President of India, Srimati Draupadi Murmu, celebrating the bank's 80-year journey. UCO Bank honors your trust.
सुशासन विकास रोजगार डबल इंजन की सरकार मोदी योगी की मेहनत से बदला आज नजारा है खुशहाली के एक्सप्रेस वे पर बढ़ता राज हमारा है यूपी की रफ्तार देख कर बोली दुनिया सारी 6 वर्षों का काम दिख रहा 60 साल पर भारी 6 वर्षों का काम दिख रहा 60 साल पर भारी कांप रहे अपराधी डर से छटा घोर अंधियारा है खुशहाली के एक्सप्रेस वे पर बढ़ता राज हमारा है खुशहाली के एक्सप्रेस वे पर बढ़ता राज हमारा है
सुशासन विकास रोजगार डबल इंजन की सरकार 6 साल यूपी खुशहाल।
We are in an age of constant change and evolving risk landscape, whether it's climate change, supply chain, or geopolitics. Clarity about strategy, key priorities, and the premise on which the business is built is a must for risk managers today. This can help them identify and contextualize the weak signals that they spot in their horizon.
To nominate your organization for the India Risk Management Awards, visit the below link.
What if you were an apparel company facing an avalanche of demand? So you call IBM to automate your IT infrastructure. And now your e-commerce platform can handle spikes in orders. Let's create IT systems that roll up their own sleeves. IBM, let's create.
We are conducting today a nationwide cattle care program. We are organizing a really large footfall of cattle care for cattle as well as for cattle owners.
एक दिन में आप जब इतना बड़ा स्केल रीच आउट करते हैं तो ये बहुत इंपॉर्टेंट है ओवरऑल कैटल इंडस्ट्री के लिए.
As an organization, fostering a culture that emphasizes on customer satisfaction is key to everything we do.
अंदर का माल बाहर चिपका है कुछ तो छुपा रहा है
hey, ये पेंटिंग हटा नहीं बाबूजी अंकल जी तुमसे ना छुप पाएगा क्रैक पानी जाएगा अंदर घर बनेगा खंडर तो फिर बर्जर लॉन्ग लाइफ फ्लेक्सिबल इसका फ्लेक्सिबल फिल्म न सिर्फ क्रैक ढके बल्कि फंगस से भी प्रोटेक्शन दे बर्जर लॉन्ग लाइफ फ्लेक्सिबल
MCX Natural Gas Mini Futures Contract 250 MMBTU available for trading from the 14th of March. Refer to circular on mcxindia.com.
Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we are tracking for you. The fourth headline now, Dalmia Bharat clocked gains today after agreeing to sell its 42.36% stake in Dalmia Bharat Refractories to promoter group, that is Sarvapriya Healthcare. Nigel is here with all those details and what led to this surge in stock. Nigel.
Well, that's right. It's good news coming in for the Dalmia Group on the whole because they've gone ahead and they've exited their 42% stake in Dalmia Bharat Refractories business. Remember, they had around 42% odd and the total consideration that they'll be getting for this is around 800 crores. The entity that's buying this stake, this 42% stake, is the promoter entity. And the company is, they have given a timeline that they expect this deal to be consummated in the next 30 days or so. They've also given the timeline with the payment outgo. So first up, they'll receive around 20% of the consideration, which is around 160 crores odd. And the following two payments of around 320 crores each will be via NCDs, which will give an interest of close to around 8.5%. Now, why is this positive for the group? One is because they said they're going to be exiting their non-core investments, and that's what they're doing. So step in the right direction. Second, they are aggressively looking to add capacity, and they are headed towards 100 million tons target that they had. So it gives them more cash in their hands that they can use it for this expansion. And point number three is the street was a little bit wary that maybe they'll do some inorganic growth, which will be in an unrelated space. Now, if this asset goes to the promoter entity, then that inorganic growth in an unlisted space will be done by the promoter entity and not from the listed entity. And that's why the street likes what they're seeing in terms of them divesting this asset. Back to you.
Okay, thank you so much, Nigel, for joining us with those details and a whole host of stocks. They were in focus in today's trading session on the back of fresh brokerage growths. Reliance Industries, for instance, was higher by 2% after domestic brokerage firm Kotak Institutional Equities. They called the stock a compelling buy at current levels. In fact, in their report, they go on to say RIL's recent underperformance has been quite puzzling, and across key verticals, the outlook is quite positive. They speak about the energy segment where earnings, according to them, will continue to be very robust. In telecom, rising competitive intensity and the delay in tariffs by 2024 elections is something that will see an impact, and it will lead to some margin compression. However, it will also lead to duopoly and result in accelerated market share gains for Reliance Jio, according to the brokerage. In retail, recent acquisitions, store expansions and entry in new verticals for them is positive. Reliance, according to them, will have market leadership across several verticals, but they have lowered their FY24, FY25 EBITDA by 5% on the back of the tariff hike delay that they've been seeing. But overall, they are very positive. They reiterate their buy with a target price of 2,900 rupees per share. And that is about Reliance Industries. But I'm tracking one more stock for you, and that is Phoenix Mills. That is also on our radar. This is after Morgan Stanley has initiated a coverage on the stock. It ended higher by 3%. So they have an overweight rating with a target price of 1,700 rupees per share. They say this has a portfolio of well-located mixed-use destination malls and set to benefit from India's growing consumption story as well. Plus, it is in expansion phase, which will work well for the company, and they aim to more than double their rental portfolio over the next 3 to 4 years. They have planned an expansion of their rental assets, which is from 9 million square feet in FY22 to 21 million square feet in FY27, and this should drive an EBITDA CAGR of 27% for the company, and that's why they like. This is the second positive note or an initiating coverage on Phoenix Mills in just last 7 days. So brokerages, of course, are looking at this stock very positively. Moving on now, both M&M and Escorts saw ratings downgrades earlier today. Nimesh Shah is standing by with what the analysts make of these two auto stocks. Nimesh.
So it's a rare downgrade coming in on M&M. In fact, M&M has been a big rank outperformer in the auto names for the last 1 year. And today, BofA has downgraded the stock to neutral from buy, and they've cut the target price to 1320 versus 1500 earlier. Even on, they reiterated the negative stance or the underperformer rating on Escorts as well, and there they've also cut the target price to 1700 versus 1800 earlier. Now, coming specifically on M&M, BofA believes that in fact they've revised the EPS down by 3% to factoring in a mild tractor down cycle and in a cut in the UV volumes going forward. In fact, they believe that uncertain farm outlook, earnings downgrade, and lack of meaningful catalysts are the near-term negative triggers for M&M, and that's going to weigh on the sentiment on the stock as well going forward. And in fact, they believe that the street is overestimating the upscale in the UV business. As far as the tractor industry is concerned, BofA believes, and they've actually cut the volumes by 3 to 4% for FY24. And they say that if that El Nino has to be taken into account, then the decline for the tractor industry could be 8 to 10%. Though that's not the base case, but that's the risk for the tractor industry going forward. So on back of big outperformance, the fact that M&M is a big outperformer, and given the headwinds for the sector, today BofA has cut the ratings on M&M to neutral, and they've cut the target price now to 1320 versus 1500 earlier.
All right, that's all about the stocks which are in focus on the back of fresh brokerage notes. Moving on with that now, beauty and skincare brand Mamaearth has denied reports that the company has shelved its IPO plans. Speaking to CNBC-TV18, company CEO and co-founder Varun Alagh said that the reports of company withdrawing from the IPO process are baseless and unfounded, adding that he expects SEBI approval on the DRHP by next month.
queries is a standard part of the regulator's process. And they want to make sure that enough clarification, risk assessment is being added to DRHP so that consumers can make the right decisions, right? And retail investors can make the right decisions. And I think they have shared their queries. We have already responded to all of the queries. We first start focusing on getting this approval our way, and post that we want to get together with our syndicate, right, and have a conversation around what is the best timing to file RHP.
Okay, that's the word coming in from Mama Earth. Moving on, iconic houseware brand Cello World is looking at raising about 2,000 crore rupees via an IPO. The planned IPO is likely to be a mix of fresh and offer for sale. The company is likely to file its papers with SEBI by August. Yash Jain is here with more details. Yash.
Well, it's been really long since we spoke about the primary market action or the IPO market action, and we're sort of restarting that today. And what a company to really restart that with. Cello World is the company that we're speaking about. What sources have told CNBC-TV18 is that Cello World is looking to launch its IPO. The intention would be to raise approximately about 2,000 crore rupees. Sources tell CNBC-TV18 that the IPO could be a combination of fresh issue through which some funds will come into the company, which is expected to be used towards strengthening the distribution network. Also, there's an offer for sale element into it, which means existing shareholders would also look to sell partial stake belonging to them. As far as the process itself is concerned, we've been given to understand that Cello World has already started engaging with the bankers. In fact, IIFL, ICICI Securities as well as JM Financial have been appointed to lead the IPO process. As far as the timeline is concerned, sources tell us that the company would look to file its DRHP with market regulated SEBI sometime by August of this year and eventually launch its IPO by the end of current calendar year. As far as the kind of businesses are concerned, it's a long list where the company is present today, starting from home essentials like drinkware, lunch boxes, cookware, dinnerware, to sort of coming to bathroom accessories, air purifiers, vegetable and fruit washer, UV sanitizers. Also, the company is present in the basic entry-level furnitures also. There are listed companies which are sort of involved in businesses which are bits and pieces of what Cello does, but having all these different kinds of businesses under one company will be an interesting IPO to watch out for.
Okay, Yash, thank you so much for joining us with those details. To the fifth headline now, modestly better sentiment after Silicon Valley Bank finds a buyer for its deposits and loans, keeps gold prices below the $2,000 mark. Manisha Gupta is here with the analysis and all those details. Manisha.
Well, yes, gold has eased for a second straight day, moving away now from its record highs. It's down by nearly 1,500 rupees from an all-time high that we saw in the Indian markets. The international market saw a high of $2,009 per ounce, and we seem to be holding around that 1970 right now. So we've come off those kind of levels as well. Well, as the central banks and governments effort to stabilize the banking crisis, that has really eased off concerns into the market. We have seen risk aversion ease a bit also, and there is buying coming back in global equity markets. So the flight to safety that we saw in sense of gold seems to be really reducing a bit here. Also, we had seen huge amount of buying open interest and speculative longs. So there is some profit taking that we see in the market coming in because of that too. The other major point is the dollar index, which has rebounded from a 7-week lows. We did see 101 off a level as well in the previous week. We're trading at 103 right now. So that seems to be putting pressure on gold as well. But going forward, the markets do believe that inflation, lower growth, some bit of a recession concerns is something that you would continue to see going forward into the year as well. So buying on dips is still a strategy. For the month of March, we have seen the gold prices gain up by nearly 7%. And for the current year, the first quarter of this year, we are up by nearly 9.5% for the yellow metal.
Okay, Manisha, thank you so much for joining us. So that's all about gold. Let's move on to the taxation bit now. Angel tax will now be applicable to investments made by foreign investors in unlisted companies from April 1, 2023. Saurabh Srivastava, co-founder and former chairman at NASSCOM, says no other country in the world has imposed this tax, mainly due to its negative implications on the startup ecosystem. Take a look.
In some ways, this rule has the reverse effect of what we really want. We don't want our companies to flip overseas. If we put these rules, which make it difficult for foreign investors to invest in India, 85% of the risk capital, venture capital, private equity, angel investments, 85% of that capital that goes into the Indian startup ecosystem actually is foreign capital. No country in the world has got into government trying to value startups in terms of imposing angel tax.
Okay, all right. With that, it's a wrap on this edition of Markets Today. Thank you for watching.
Powered by Federal